Week. We're going to do a weekly review. I'm going to head to the gym after this, so not going to make it super long, but we need to go through, well, I'm going to go through Thursday's price action, any potential moves that would have formed, or that you could have taken, not necessarily would have formed. Friday as well, the news that we had, and, well, my weekly review is I didn't take any trades this week. All these setups that did form, I either was busy at work, wasn't paying enough attention to the charts at the time, to the point where I could identify them until afterwards, or I just didn't want to trade on that day due to the news that we had. We had FOMC, we had bank rate decisions, a lot of chop at the start of the week as well, and then Friday was actually quite a nice day. So, what we're going to do is slot into the weekly chart here. So look, so this week just gone here, on the daily chart. Still targeting this. Right, now we've got a nice break of structure on the daily chart. So I'm expecting this to accumulate before we push up around here. But with that being said, if we have a look at Wednesday, so where are we at? So this is just a big FOMC buy day that I covered. Thursday, it's a bit more. It's a bit more going on a Thursday. So yeah, as you can see, there's a lot of you got accumulation here. Price pushes all the way down, sweeps this. Yeah. This is on a 15-minute chart, so I guess, that doesn't quite close above it, but that's still quite difficult to tell. I guess if you looked on a lower time frame, you might see that there is a setup that forms around here. If we look at NASDAQ as well, the same time frame, see if we got an SMT. Yeah, so, well, not really an SMT. Both of them are kind of higher lows. We had the news at 9:30, so where's 8:30 from? Right, yeah, so from here, you manipulate down into, I've gone a 5 minute actually. Switch into S&P. What day am I on here? Thursday, right. So, 8:30 here. Price comes down. Look at the bodies of the candles here. Look at how these form. So, top of this wick is basically a nice entry point. If you get this break here, break a structure here, retrace back into it, go long, target up here. Nice. What about the actual session? So you can see that I guarantee this will be around 11 o'clock-ish. Yeah, 10:45. And then just sort of chills out a bit. Power of 3 in the New York session now. So you got the daily power of 3 and the daily and the power of 3 per session. Just to give you more of a idea of where price is going to go. We trade back down again. Fill in all of this imbalance down here. Just do we sweep it? Didn't quite sweep it, but you look at the wick of this candle here, how it taps bang on the body of this candle here, and then we just accumulate for the rest of the day. Nothing doing. So that was the main move on the Thursday with the news, bank rate decisions, etc. So we had quite a lot of different news. I think it looked quite busy in that day. Can I go back here? Yeah, so you can see there's a lot of red folder, I hadn't actually realised this was GBP news. So the unemployment claims would have been the movement. Okay. The USD news. Interesting. Right, okay. And then going into Friday, some core retail sales. Canadian. So, Friday was actually quite a nice day for price. Like, if we just zoom out on the 1 hour again, yeah, you can see we still got the higher time frame model of that. That's kind of 4 hour actually. So, yeah, right now you can see we are definitely accumulating in this range. We've got to get all the buy and sell orders filled within here, so we've got enough liquidity to then push up here. Do you know what I mean? So, yeah, next week I'm definitely looking for us to move towards this. I'm not sure how long it normally takes, but, we look at this being, what are we now, 22nd, Friday there to Monday there. So this is a whole week's candle here. There's a lot going on. But yeah, overall I'm pretty bullish there. I got a bit sidetracked there, but looking at Friday's move, you can see pretty nice. Like, got a nice movement in the AM session. Even in the London session, there was a good soup here. So I think let's go into 5 minute. Let's just go for each of the moves. Yeah, so London price comes down, pushes up above opening price. Look at this massive imbalance. Displaces here, so this comes across. And then we retrace into this, and on the 15-minute chart, that's just above 12:30 open. So on the 15-minute chart, that is beautiful. Come down, we sweep this. I think on the Nasdaq as well, that actually took that high. I think it's a bit more aggressive. Yes, you can see here we've got S&T, so let's just draw this out. So this is where S&T comes into play, because the assets are correlated, the Nasdaq and the S&P. Let's just do S&T there. So the market has tipped its hand. On Nasdaq, we've swept this high and then displaced. Maybe not as cleanly as on the S&P, but the fact that the Nasdaq has done it means that the S&P doesn't need that to happen. So we can see that it hasn't actually taken this high, so it's weaker at that point. So this is the turtle soup setup here. Buy side gets swept. We displace down, which means this candle closes below this. We've got a fair value gap that forms. Perfect. Retrace it up into the fair value gap. So right now I'm looking for shorts here. I'll stop above there. And for targets, I'm either looking at where do we have relative equal lows. So you could say like that, 2.8 to 1. That's a lovely trade there. Or what you can do is, if you get your Fibonacci, and we do of the manipulation leg, so we do the bodies of the candles, and then I've drawn it the wrong way around, just need to reverse this. Then you can take this one standard deviation as like your targets. You can use these as your targets. So what, 3 standard deviations. So if you actually held price from here, bang in the optimal trade entry zone on the manipulation leg, let's have a look at this. This is going to be a big trade. It's actually quite nice knowing that this formed in the London session. So you put your stop just above this high. three standard deviations, bang, 7.8 to 1, beautiful. And then we get this nice little reversal up here, price continues. So, for highest probability, if I was to do this setup, I would go for one standard deviation just because it's high probability and I'm trading with quite small amounts at the moment. I'm not trading with multiple contracts. So I'm still learning to get more comfortable with my setup and, just collecting enough data to be at a point where I feel happy to take positions off and, go break even at this point, or even like once we take this, just to like let runners run. At the moment, I'm just interested on the lowest hanging fruit. So my targets would be here, which are, as discussed, pretty much in line with these lows over here. So we've got liquidity down here. So you could, like, ideally 1.5, that would have been the target, 4.6 to 1 risk to reward there. But yeah, so that's one of the trades that we could have taken on Friday. Just for context, that's my sell model. That is what I use for my sell model. My buy model I'm about to go into now, and I'll show you what I mean. So I have two trade setups that form, and if either of them form within the New York Open, then I am aiming to take them. But this week, like I said, I've been very busy at work. So I'll go into this next setup that formed. So what we're looking at here is we've got this order block on 5 minute. I think, can I get it on the 15 minute? No, it's on the 5 minute. Yeah, so this order block here, why this one? Well, I drew this up after drawing this up. I didn't take this trade. This was just, a mock-up of what I would have possibly been able to do during the session. So when we come into the New York Open, we've got all of this imbalance down here, yeah? We've sort of come down to 3 standard deviations, which, has then swept this liquidity over here. So we've gone from taking this liquidity here, then pushing down, taking this and this, right? Now, I know that we've already come down here, and this is all filled in here. There is an inverse fair value gap on the lower time frame, but we're looking at the higher time frame for more conviction in our movement. So with that in mind, knowing that is the case, this buy setup looks more higher probability, especially the fact that we are in this optimal trade entry range bullish on the daily chart. So going in here, there's a lot of chop. There's a lot of chop in this session. I guess what you'd be looking for, even on the 1 minute, this is one of the reasons why I didn't take the trade, because although you could have done this, it's not massively clear if you're at work, you're trying to do something, and you've just got a chart open on like one screen. So I guess what we got, 9:30. Just dashing about, basically. This is why I wasn't too keen on it at the time. But so you're coming down here, take these highs. So you got. I might actually mark this out so I can understand what I was actually looking at, because I did it at the time. Right, so we got buy side liquidity there. Yeah, black. Yeah. So that gets swept. We come down, fill this imbalance, and then we take this liquidity, this, and this, and we've got an order block here. So that, we draw that across. This order block here, and the order block is the last opposite way candle before, like a big movement like this. So you've got 3 bullish candles after this. So that's what classes that as the order block. if we did that right to the top of the wick on the 1 minute, I think it's about there. Maybe a bit higher. Yeah, you can see how the bodies of the candles, and really respect this. So the wick comes down here on the first touch, and we come down body there, and then if we zoom in a bit more, we are then looking at this. So we've got one breaker structure here. Let me just draw this in. Right. So this up candle closes above this structure here, and then we continue up, and right here, you know, it's not massively clean fair value gap on the 1 minute. However, if you look at this, the 3 minute chart, we do actually get an order block that forms. So we've got another down candle here, and 1, 2, 3 bullish candles. So this is not an entry. This is not an entry. We're not going in here. We then see price closes above this. Yeah. It then retraces back into this order block. So the entry would have been, you know, as we tap the order block. Where would you target? Well, what do we have over here? We've got this big imbalance down here, or over here. Right, so how do I know how far up this imbalance is going to go? Well, this order block here could be a potential option, or, you know, because we've got fair value gaps all the way down here, do you know what I mean? So the order block is another confluence that we can use. So if in that case, you target the bottom of the order block, I think it was on the 3 minute? Yeah, so around there. And then the stop, why would I put my stop there? Well, why would I put my stop there? That is the question. Let's have a look. So I would put it just under the order block. You know, there's no imbalance here. Price has been filled in, as you can see. And yeah, you just get a lovely reaction to the upside, and that's 3.5 to 1R. Price does trade back down afterwards, but you look at how the time this delivers. What time is that? Bang on 11 o'clock. You know, when does the reversal start? Just after 10. Just after 10, and then that comes up. So you got the 10 a.m. reversal on a London suit model. So there's two trades you could have taken here today. What? You hit that 1.5, 4.6 to R, 4.6R and 3.5R. So that would have been really nice. But, you know, at the time, it's always easier in hindsight, isn't it? It's always easier in hindsight, but this is why I'm doing this, to go back and read the charts, analyze where I can improve, why I didn't take setups, what setups I can use in the future, how do they form differently, what am I looking for, do you know what I mean? So following this, if we go onto the 15 minute, you can see when price comes back down, this candle, I think it sweeps. Does it sweep that? Yeah, so we sweep these equal lows here, take them out, and we push back up to then take the external. So we filled the imbalance, swept sell side again to get a bit more liquidity to then push back up, and then take these highs, and eventually coming back above opening price. So this, we call this the lunchtime reversal. You know, you can get a 10 a.m. reversal and then lunchtime retracement even. And then, yeah, you know, you just accumulate for a little bit, and obviously it's Friday afternoon, it slows down, but you can see we do eventually come straight back up above this to take out anyone that was still short earlier in the day. So There's a lot to take in there. There's a lot to even think about. But this is the sort of thing I've been looking at. Yeah, it's nice to see both my models forming in the same day, really. It's just a shame it didn't get taken, but still, it's good to be able to analyse that and review it so I can understand what is actually happening or when that could form again, because that's a really nice day. So, yeah, like I say, no trades for the week. I've deposited a bit more cash into my broker account, so I think now if I was to take that with the same amount of risk, instead of like 38 quid risk on a 1%, it's now like 45. What, still have 6. Yeah, so 0.96% risk is £43. That trade there, 152 quid if I held that all the way. And this one, let's do 11. 10, 8, £42. And then there's potential 200 there. So there's what, like 300 and I forgot what the first one that I looked at was. So it's like roughly possible 300 something quid profit in that day available. I only take one trade a day. That's it. So it wouldn't have even mattered, but it's just nice to see that setups do form. Thursday I wasn't as happy with the price action. As you can see, I didn't draw anything on it. The setup would have been this retracement to the buy, targeting all this liquidity up here and this previous order block, you know. So we would have, I have a feeling, yeah. But it's one of those. No trades isn't a bad thing. You can see now how my chart is really filling up as I'm like marking these setups every day. I do want to clear my chart at some point, but I kind of feel it's I quite like having everything here because I can always just do this, you know, if I want a clearer view of what I'm looking at. But like I say, bullish overall. You can see there's nothing really for price to come back into here now. We've got volume imbalances here, order block here. But the wick is kind of throwing me off because it's on the daily chart, so I'm not too sure. I'll be looking at how price reacts off this in the coming weeks or so. But yeah, with this filled in over here, I'm just definitely more upside focused at the moment. Targeting that. But yeah, bit of a longer one this week. I did miss a couple of days. I was out on Thursday for a corporate event, and then Friday I just had a bit of a chill one, to be honest. It was a busy week. So, lovely. Going into next week, I'll be back on Monday with a market review, possible trade review, maybe not. But yeah, happy days.